Hello, welcome to the first quarter 2017 quarterly update. I am Mark Pearson, President and Chief Investment Officer of Nepsis Capital Management. I'd like to thank you for taking the time to watch this update, and once again, thank you for the opportunity to be the stewards of your resources. My hope is today we can give you some clarity regarding your portfolio and frankly some of the exciting things that are happening here at Nepsis Capital. First, let me begin by apologizing for the delay in our quarterly. We usually try to get these out within a month after the end of each quarter. However, we've had a lot of changes going on here at Nepsis, great exciting things including a brand new website and some new branding to what we believe better communicate the benefits and the power behind what we do here at Nepsis Capital. So my apologies for the delay. I'd like to encourage you to check out the new website, in particularly the information regarding the power behind our SMA platform, separately managed account. We call it Smart Investing with Clarity. Additionally, we are rolling out our own new proprietary financial planning process called the Clarity Roadmap. The Smart Investing with Clarity, along with the Clarity Roadmap, are two pieces that we have put together that we believe can more efficiently provide you excellent clarity when it comes to your investment and financial planning needs. So we're very excited about it. Lots of great new content. We will be rolling out 5 SMART white papers. SMART is an acronym for strategic management, also asset allocation, risk management, and transparency. 5 critical areas we believe that can enhance your ability to invest and plan with success. So again, apologies for the delay, but I think you're going to like the content. Very helpful and beneficial as you move down in your journey on your road to ultimate clarity in your investment and planning needs. So let me start with first quarter performance, some of the things happening within the portfolio. Obviously, after the election, markets have continued to move higher. Frankly, markets continue to move on a wall of worry. Interestingly enough, sentiment is still very negative as it pertains to the president and the White House. People are concerned that things are chaotic. At the same time, markets continue to hit all-time highs as we are recording this report today. Folks, you cannot guess what markets are going to do. Markets are not logical. They're illogical, and trying to determine or rationalize something that is illogical doesn't make sense. The way you combat illogicalness is to have a process in place. The investment process at Nepsis says that we don't try to time a market. We don't try to time when to buy in a company. We want you to invest in over time. We look at the buying criteria and the sell discipline in making the decisions in the portfolio. Certainly, first quarter has started out very well. It continues here in the second quarter to be doing very well. We're very pleased with the companies, the businesses that you own in your portfolio. And quite frankly, it's been very difficult for me to add positions because anytime we really add a new position, we have to do one of two things. We have to sell something that is maybe not as exciting to us as some of our other positions, or we have to sell a portion of positions we already own to raise capital to buy more of these new opportunities that present themselves. This quarter, we've added a couple new opportunities. We'll talk about that next quarter. But in terms of what's happening now with portfolios, finally, emerging markets and international stocks are doing well. I believe I said in my last quarterly update, don't try to time markets and don't try to time world indexes either. Many investors have been not investing in international. They're significantly underweight in international emerging markets because for 5 or 6 years they didn't do very well. Lo and behold, in 2017, Europe in particular, as well as China and other emerging markets, are doing very well, and the businesses that we have owned there for quite a while are doing very well this year. We don't get excited one way or the other. They're businesses that we love, and we're looking at owning them for the long term, kind of the Warren Buffett mentality when it comes to investing in the business. Invest in it and forget about it. One in particular company that you may have noticed that we've been doing a lot of buying on, and a lot of what we call strategic cost averaging, which is the process of strategically investing more and more into a business over time. We also refer to the penny jar theory. This is a blog that we've written where we may buy little bits of a company or sell a little bit of a company as part of the strategic cost averaging process. But the penny jar theory says one day you wake up, you can't believe all the pennies you have, right? Well, it's the same thing with buying businesses, particularly a company like EcoArc. Most of you probably don't know that I've been involved with this company for over 5 years when it was private. Very intimately familiar with senior management. I'm also believing that they are very good at what they do, very knowledgeable in their expertise. And so our position in that company is a little bit higher than we normally go with most companies. We believe that this company, EcoArc, can be a game changer as it pertains to their Zest technology. It is the only technology that we're aware of out there that can track fresh or other things as well, from the time it's in the farm field to the time it's an animal, all the way to the time it hits the floor of the grocery store. And in an era where more people are wanting organic, more people are wanting fresh, and when it comes to their food, people are becoming more picky about that. EcoArc has created a technology that no one else has, and we have found that can do what they're doing. We believe this company can be a game changer. As I'm doing this update, at any time they're going to be uplisted to the NASDAQ. I am in constant communication with this company as long as we're not in a quiet period with them, in terms of talking with them about what they're doing and how they're doing it. We believe that we've been able to give them some great insight, particularly as it pertains to their website and their PR, and we're very excited about the direction they're going in. They've got an all-star board of directors. This is going to be, we believe, a very good long-term investment. Now, it doesn't mean we can't be wrong, not only in the short term, but also in the long term. And some investors have been asking me, why have you been buying this stock for so long? Why did you buy so much of it? Well, one of the reasons we did it was because the company is small and we wanted to own a 20% position in this company. A couple of reasons why we wanted to own 20%. The main reason was we wanted to have influence in the event that someone would try to come and buy this company out. We don't want the company bought out. We believe there's tremendous upside. The second reason we did was we believe that this is a phenomenal investment opportunity. But with any investment, we can be wrong. This is why you diversify your portfolio. This is why you asset allocate your portfolio. The theory is if you have a 10% position in a company and it goes down by 50%, it could have a 5% impact on your portfolio. What do I mean by that? Take a $100,000 portfolio, 10% is $10,000. If it goes down 50%, that's $5,000. $5,000 on a $100,000 portfolio is 5%. Downside to the portfolio, minimal. But if this company does what we think it can do and believe it can do, it can add significantly higher performance to the upside in your portfolio. We refer to this as risk-adjusted return. How much risk do you take to get the returns you're getting? And we believe that this company is a game changer. Obviously, if you have a 10% position and it doubles, it's going to be potentially close to a 20% position in your portfolio. We will be communicating with clients via email or via video regarding our position when that stock begins to move higher. At this particular juncture, we have zero interest in selling this company for a long time. Again, when you think about the world of fresh, and you think about the world of logistics and supply chain management, we believe this company could be a huge game changer in this industry. So we're very excited about that. Remember, at Nepsis, Smart Investing with Clarity, it is a combination of an SMA, separately managed account, along with the art of investing. Unfortunately, I believe we live in a world right now where we may see some serious unintended consequences as it pertains to the changes happening within the financial services industry. First of all, the DOL has come out with new rules and regulations as it pertains to fiduciary responsibility. Frankly, this doesn't impact Nepsis at all that much because we are a fiduciary already, but it is turning the broker-dealer world upside down as well as the insurance business. And in our opinion, we believe that longer term, there are some potential issues that are going to happen. One of them is we are already seeing a race to the bottom when it comes to fees, when it comes for justification of making a recommendation to an investor. And the financial services industry is focusing on two things: cost, cost, cost when it comes to money management and the financial advisor's fee. Folks, when you invest your money and you hire a money manager like Nepsis, we are not a cost, we are an investment. You hire us to provide you with the leadership and expertise to execute on a proven process that will enable you to be a successful investor over time. You invest in Nepsis when you pay us to manage your portfolios. It's not a cost. And at some point, the financial services industry will drive costs down so much, there will be a definite difference in the quality of service and the quality of product you will receive. Now, here at Nepsis, of course, these races to the bottom on fees pertain more to ETFs and index funds. We don't believe in indexing. We believe indexes are averages. We don't believe in investing in average. We believe that the process we have created for money management contains an element of art, an element of expertise to execute on opportunities volatility creates to help you invest like a business owner, to help you enhance your position longer term. We will have good years, we will have bad years, but we've been doing this for over 20 years. And we continue to grow, and people continue to love the message of clarity, the idea of a separately managed account where your money is not commingled, and the art of the management and the execution on your portfolio. Please, I want to encourage you to go to the new website at nepsiscapital.com and read information on smart investing with clarity. I think you'll find it beneficial. That leads me to the Clarity Roadmap. In light of the DOL, in light of changes happening in the financial services industry, I'm very excited to announce that we are rolling out our Clarity Roadmap. Really, this has been a process for the last 15 years, a vision I have had in combining the money management, the portfolio management with financial planning in a much more direct, succinct way that enables investors to have a much clearer path, roadmap, if you will, to ultimate clarity as it pertains to their financial goals and their investment goals. And by providing the processes and the tools that we've created now, we believe it could enhance your ability in not only your investments, but also in your planning. Obviously, there's no guarantees. People have to stick to the plan. You have to make a plan and stick to the plan. And we believe that the tools we have created to do this now are a major differentiator in this industry. We are getting a huge amount of interest in this process. So we're very excited about it. Again, I would encourage you to check out our website and talk to your financial advisor about how you may be able to do the Clarity Roadmap along with our money management. I think you'll find it very beneficial as it pertains to your portfolio. All right. Markets are at all-time highs. Everybody always likes to ask the proverbial question, what's the market going to do the rest of the year? Well, as many of you heard me say, especially those who listen to our radio show, I'm not in the business of prognostication, postulation, or speculation. I don't care what markets do over short periods of time. What I care about is process, a proven process, and sticking to that process. My guarantee, although I can't really make guarantees, but my belief is that we will continue to stick to the process, continue to stick to strategic cost averaging, and not get emotional about the investment process, but stick to both the science and the art, which creates the ability for an investor to be successful over time by continually investing in great businesses. Now, we are still at all-time highs with cash sitting on the sidelines. We still are seeing fixed income, bonds in particular, not provide great returns for investors. We believe there's pent-up demand for people to buy equities on any pullback. We believe that the markets are going to go a lot higher over time. We will see a correction. We will see a 5, 10, 20% correction. I'm guaranteeing that. I don't know when, but when it happens, we will bob and weave. We will use our sell discipline, 4 sell disciplines on the website. You can find them there, in executing the process to enable you to be successful at investing over time. We think that interest rates, as they bounce around between 2.1 and 2.7 right now, we think that's a head fake. We think that the Feds are going to continue to raise interest rates, and bonds, remember I talked earlier, risk-adjusted return, downside risk versus upside potential. We don't believe bonds give much upside potential. So we are looking for alternatives, particularly in our conservative portfolios, to provide safer, or shall I say, less volatile investments for you to own for those conservative portfolios, while still providing you an element of income and some growth. Total return is more important today than ever before, particularly in conservative portfolios. What do I mean by that? You must have a combination of dividends and interest and capital appreciation, having that asset go up in value. It's going to be critical, continue to be in this low interest rate environment. Obviously, our income and growth and balanced portfolios have been performing stellar for quite a few years. We're very pleased with that. We do have some ask, why do we have so much in cash? I'm paying you a management fee and you have my money in cash. Folks, let me make this very clear. You don't pay us to own cash, you pay us to know when to own cash. And so as we find investments that we believe provide a risk-adjusted return potential within our parameters, we will put that cash to work. In the meantime, we will wait for those opportunities because you've hired us as a management firm to manage your portfolio as such. So as we go into the next rest of the year, who knows what the market's going to do? I can make one guarantee: it's going to give us some surprises. So when that happens, we will react appropriately. We will continue to stick to the knitting, and we believe that we're going to continue to provide you with great content, particularly through the new website, that will help you increase your clarity and your success investing. One last thing before I go, I want to encourage you, if you'd like to hear me, you can tune in to iHeartRadio at iHeartRadio, search out Investing for Success with Mark Pearson. We are locally here in Minneapolis on 1440 AM. But outside the state of Minnesota, you can tune in on iHeartRadio, get my thoughts on what's happening with the markets, get my thoughts on how you can enhance your ability to invest with success. Thanks again for tuning in. I hope you found this update beneficial, and I look forward to coming back to you with our next update next quarter. Have a great day.